Good evening, everyone. This is Henry Gambell with simplertrading.com, and in tonight's free video, I wanted to recap what I had been going over with you in, I believe it was Monday's free video. So in that video, and you can come in and see what session Monday would have been, that's the 12th, kind of this really quiet day in here. So when I started working this idea, I was thinking, all right, during expiration, maybe Apple can be kind of choppy. Maybe it can revolve or kind of oscillate around a psychological level, and 200 would be a good spot to do that. All right, I put the trade on through the iron fly, looking for basically prices to stay right around 200. The very next day, we rally all the way up into 212. This is where a lot of the comments from that video I think are helpful, and it's good to follow through on them because, at the end of it, we discussed 4 different spread strategies, and I'd mentioned I believe I like the iron fly the best because it has defined risk where the short straddle does not. And in environments like this, when it's just ripping you apart the next day, that is the luxury of trading options, is that you don't take a stop. Why would you take a stop when you have defined risk? One other concept before we get to how it's ultimately played out here is to think about how Apple has been so fractal in the way that it has held these 618 retracements. If we go way back on this weekly chart, you can see a pattern where we've got a major swing low against a major swing high, and the 618 retracement of that move holds. Then this pattern repeats, swing low to swing high, and the 618 holds. If you've ever studied Fibonacci, it's a very common level and something a lot of traders will look at. If you take that concept and then apply it to the daily, you can do that with the rally that we saw on Tuesday. No, it did not hold to the tick, but you just consider it as a place to fade any sharp emotion. And the reaction after earnings to this big flush lower, that's a very serious swing in a fairly short amount of time, and acknowledging the retracement back up to it, I think, is very important. So, long story short, we were able to hold that because we have the defined risk. Then you get the significant pullbacks down into Wednesday and Thursday, and here we are, only 4 days later, tomorrow being the 5th, but if Apple can trade around 200, that premium will really start to come in, and that's just how you try to define your risk with options, see your plan through, and hopefully that's helpful as you try to look for trading opportunities around expiration. So, y'all have a great Friday, and we'll see you at the next free video.